Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So, got a flip of that 48K region and a weekly candle close push to the upside. What was that 48K flip? It was off of this range pop here. We closed above that point of control from this region over here too, which is an entire 2021 from August to January 2022 point of control region. We possibly flipped it to go higher. We went over that idea less than 12 hours ago. So, and we had that on the other chart here actually. So we were looking at it on the weekly. So let's go ahead and start with the weekly candle close here. So we're talking about needing to close above that 47,160 for some bullish nature. The entire drop, this impulse to the downside, we have all these levels to react off of. We previously reacted off of the 618 the first time we came up here. Let me go ahead and hide this object tree. So we're going to go ahead and turn that off, and turn off some of these. Okay. Wait, that's not that one. Yeah. Okay. So on the weekly time frame, you have basically these points that we could come up to. There's a 49,367 region of this weekly close zone. A lot of daily candle closes around that 49,367 region. You also have the 50K, 50,777, basically triple sevens for a good measure. And yeah, do we close above this 50K or not for the week? Do we go up here and retrace back down to the point of control at 41, or even halfway of this at the 45K? What is in store this week? Let's go ahead and take a look at the news first and foremost. Let's keep ourselves abreast to what's in the pipeline. Some speakers speaking today, and we have a red folder of some FOMC stuff going on in the later half of the New York session towards the close. And yeah, we have some New Zealand and German news, red folder events, and the CPI for the dollar on Tuesday pre-market. Then we also have the German CPI on Wednesday, unemployment for the Australian, a lot of world economic stuff alongside US. We have the core retail and unemployment claims for America on Thursday, midweek reversal, and Friday PPI should send it in a direction algorithmically very fast. All right, so we got a lot of red folders this week, late in the later half of the week. So are we establishing a high for the week and then start to go in the middle and then establish a low and then break the high? That will be interesting. The first move, it is false move Monday, so is the first move today fake? That is the question. So we're going to go take a look at the liquidity. What is the liquidity? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters are. So let's do it now. First, 7.48 liquidated on those short squeeze to the upside in the last 4 hours. You had a little bit of longs, but majority of short squeezed. 24 million in short squeeze liquidity for Bitcoin.
Fatality.
And looking at Link, you also have 27 million for Link. That was a strange play we watched where Link was hogging the charts. It was one guy that got liquidated for 24 million, I believe it was. Gotta be careful out there. So let's go ahead and take a look at what lurks above and below price action with the liquidity. So if we look at the daily time frame, we squeezed up, not many longs caught that, and they're still possibly coming up to here. Previously in the last 12 hours we saw it on the daily even Steven, and we said coming up to grab that 48.6-ish region would be something to think about, and then possibly coming lower. Why lower? Well, if you go to the weekly, we do have a large amount down here at that 46.2 region. So coming down to that to take out all these overlapped liquidity pools. Starts to taper at that 46.1. I mean, you still have stuff all the way down to there, but realistically on the way you'll be getting some shorts too. If we come to the map, heat map of this, then you can also see that there is some liquidity down at 46.6, and we just took out the liquidity of the shorts. If we go to the open interest here, you had a large amount of longs opening up as they liquidated the shorts here, and there was a large net short outflow and a large inflow of longs. Do they come back and punish some of these longs? They have been rewarding them the entire time. They build up shorts and punish the shorts. When is their target going to be met? That is what everyone wants to know. All right, so let's go ahead and throw on the math and take a look at what is going on. That was what we, trend base fibs, there we go. All right, so coming lower in the price. So yesterday, we're gonna delete the bearish trend-based fib, but first we're gonna hold ourselves to the flame of what we said. So we said if we come lower, what you would want to see, we were saying this maintaining of the 236 at 48.3, and then we started to make our way down, and we never broke that 706. We always talk about the 706 being the access denied or access granted to the move. So this is your access denied for that play to the downside, and that's where you would look at your play based on this candle closing above that level. Also, conversely, if we delete this and look at the opposite end of the spectrum, you had this bullish play from Saturday. Here we had an impulse retrace on a lower time frame. Let's go ahead and take a look at that for you. On the hourly, we had this impulse retrace continuation. We came up to the 706, got access denied, came back down. We held this 236 in a bullish manner, and now we're butting our head up against the resistance at the 786 at 48.588. Okay, so if you continue on this manner, this path here, the upwards trajectory, 50,007 for that full move. These purple ones are points of control, so that lines up with this push up here. If they trap some shorts and they intend to punish them up to 50K, that's the way they would do it. So let's go ahead and go through the time frame as we do, but first let's say what's up to everyone. How's it going, Dingo, CC, hello, and everyone else who is watching. Thank you for tuning in. We'll try to keep it in sync with what's going on in the market. So let's go ahead and expand our vision to the higher time frame first. Always good to keep abreast of the higher time frame play. We held this point of control, bounced off that point of control down here. We were talking about the 236 of this larger move. So if we just take this off really quick, you can see we are on in line. We came up to that 47.197, closed the candle at it, meandered around, and now we're drifting up to that 49K mark, potentially speaking, on this bullish trend on the daily time frame. So the same thing we just did on a smaller time frame, the hourly, to get nitty gritty. Here's the larger trajectory. We first sputtered at the 706 as we do. They came down and got the access granted to the upside. All right, so let's go higher. So we had the weekly candle close. The weekly candle closed just shy of the 618 retracement of this weekly retrace level. Do we hold this level? Are we creating a wick to this region to come back down. It's anyone's fair game at this point for whether this rejects off the 618 on a candle close idea or not. If we come to the oscillator here, the weekly time frame money flow beneath the RSI suggestive of more insertion as they paid themselves onto the shorts. You can see that clearly here. Every time it goes up, every time it goes up here, the longs pay themselves while the shorts get punished, and more enter as the longs pay themselves. So they could continue higher to whatever their target is. So the money flow beneath the RSI, potential double top on the weekly Williams. The Williams cross up event here that we had for the baselines, we have to turn on our oscillator. First things first, let's go ahead and throw that on. This is the link in the description for more. MomentumMaster.info. You can scroll down to features, toggle everything from November 2022's bottom at 15K before we knew it was a bottom with the rocket ships, and we are seeing this nice structure of the shoulder, head and shoulder out of here, and W pattern reclaiming the trend cloud, the baselines, the stochastic array, and more dynamic alerts to your phone so you can stay plugged in at every change and oscillation. So looking at the weekly, we closed this weekly strong. So this cross down event of the weekly time frame could be negated depending on how this next week plays out with all the CPI and PPI news and all of the world economic news that will determine the path of the dollar. And then by determining the path of this dollar, this cross up event of the weekly of the dollar, does it come up to here or does it come and sweep all of this here? So the dollar is holding in a break of the channel that it previously was in. If we go back to a lower time frame, we had this channel we were consolidating since January 17th. We made a move to the upside. We're currently holding it, but we have this potential of coming lower on the 12-hour time frame. So we're currently holding a range here at the 103.8. If we come down to that, do we react off of this to go higher? So it's all in the news this week will determine the tone. Do we fall back down and create a larger range narrative, or do we start to flip the script for the dollar? So coming back to Bitcoin really quick, because it's all interconnected, interwoven, if you will. If we go to the 22-hour time frame, the 22-hour is one of our broken time frames. Why do we look at the 22? Well, it was also used by somebody I used to also teach certain concepts that I found to be true, and he co-opted them as well. So this is a broken time frame. So candles are closed in general increments of on a 24-hour scale. So on a 22-hour scale, you have a 22-hour candle and a 2-hour candle, 22-hour candle, 2-hour candle, 22-hour candle, 2-hour candle. So this broken, unsyncopated rhythm creates fluctuations in the oscillation where the probabilities reset in these pooled pockets. Here's an example. You have the money flow coming beneath the RSI, and then it shoots up to the RSI. Once again, here you have the money coming beneath the money flow coming beneath the RSI, shoots up to the RSI. So these kind of fingerprints of the market maker are harder to hide on these broken time frames. So on the 22-hour time frame, currently we are overbought and starting to give the insinuation of failing the thin boy baseline. What does that mean? Well, if you go here and read about the baseline, it says your first sign of reversal. When the baselines come above the price, then it starts to express that fatigue because they are the first sign of reversal. So when it's coming like this, it's suggestive of this coming down a little bit. Okay. So do we hold this 236 on this smaller time frame, or do we break it and come down to some points of control from Saturday and the weekend and start to sweep the weekend. We put in a high for the day. Now do we put in a low for the week? Let's find out. So on the 22-hour time frame, let's go ahead and shift our attention to the lower. Same thing happening on the 12-hour time frame, also at the end of a sequence here on our keystone level. And then we're going to take a look at that money flow coming beneath the RSI. This is the longs cashing out their positions at the top as a smart trader would. And then are they going to reinsert that up to the RSI, or is this the rare case where the RSI comes down to the money flow? Most times the money flow goes up to the RSI, which is why we overlay it. One thing to hold bated breath on is this Williams. Does it cross down and give us a suppression of the stochastic on the 12? 12 is overbought and pinned to the ceiling. Doesn't really mean much when you're in a bullish narrative, as the lower time frames keep it pinned, but watching for that potential retrace idea. Higher time frame fatigue could be setting in at any moment, so watch out for late Johnny come lately longs. Okay, 6 hour. All of this is fractal in nature, so it's expressive on all time frames. It's a systematic way to view the market. So here you go, you have the baseline cross on the 6 already starting to happen, and the baseline's above price as well. So the same thing is seen on all time frames, making it very simple to make an assessment. So you see here the baselines are above the price, also giving that 6 hour suppressive play potential. If you look at the oscillator here, the 6 hour is also coming down. We are going higher, but also making a lower high on the money flow, and a possible bearish divergence could be inbound. High on the Williams as well. Do we come lower? The Williams was made by Larry Williams, the best futures trader on record. So anyone telling you indicators don't work, especially ones that were mentored by him, are liars. So let's go to the 4 hour. And yeah, you're getting the bearish divergence on the RSI, and the money flow potentially getting a bearish divergence that got negated here, but you could be double topping for that level. The stochastic has reset here, but the Williams getting a little bit gassed here. Do we see the cross down event and potential suppression by the Williams? Ideally, you want to long on the 6 hour when the Williams is in a pocket here with the rising sun. We were talking about the 38,888 crossing that region. If you recall, we were looking at that on January 23rd for this money flow beneath the RSI rising sun event. This is what we look for here. If you look at this here, doing the rising sun coming up, this is what we look for. It's the same on all time frames. So this is happening here, just the same. It's the same schematic. This is November 2022, and this is January 2024. It's the same shoulder, head, shoulder out of here. And looking for that for the long potential is where we look for it. Here is not in confluence with what I generally go for. You have this stochastic reset here, yes, but the higher time this gets gassed, the less likely it is to play out and get suppressed. So that's why we add the Williams to the stochastic probability analysis. So are we going to see this suppression of the 4 and the 6? The 4 hour already crossed up prematurely here. This is how the lower time frames kind of express their weight within their framework. And then we are still seeing the price get potentially suppressed by this cross down of the baselines on the 4. So this is how it cascades the fatigue. You see the bearish divergence, the 4 hour, the 6 hour, it's all starting to line up with the idea of some potential fatigue. You know, they're going to give the appearance of strength before it just suddenly tanks. So if you can withstand the oscillations, maybe you can be keen for something ideal for a retrace, at least down to some of these wicks at 46.6 and the other liquidity we looked at below. All right, so that is the 4 hour coming to the 1 hour. What's up, cat? What's up, cat? What do you want? You want to come say hello, I see. All right, so if you come to the hourly also had this money flow disparity beneath the RSI here, and you had a hidden bullish divergence. We had a higher high and a lower high on the money flow, suggestive of the money getting reinserted, which it did, for that blast to the upside, meeting the RSI and saying hello. You had this potential of the Williams putting in a head and shoulders event, but that money flow divergence was strong and took it above that 236 and kissed the cloud. What do I mean by kiss the cloud? Well, here you go with the trend cloud. It's the momentum master trinity, baby. So you have this trend cloud, kiss, bounce, and then when you come back, the cloud came up to the cloud came up to the price action, and we bounced off the cloud. These are your lines of defense. You have the super trend, trend cloud, and baseline, hence the trinity. All right, so if we go to the hourly, we're butting our head against this 786 level at 48,588. Do we see a bit of a retrace after that rally to the upside? Once again, coming to the liquidity to reassess and reaffirm what we saw. It's pulling back. There's a large amount down here, 47.7, for it to come back to now on the daily. Coming to the weekly, you have a large amount all the way down. They did the damage. They could pull back. Beware, if you're one of those breakout traders, you might be in for a disturbing sight to come all the way down to this level. If we go to a higher time frame, you have a large amount of liquidity to the downside, 46.6, 2.6 billion down at 46.6. So, what's up? Yeah, Misty was wanting us to hold her, right? So if you look at the 15 minute, reclaimed the cloud started to thin and it got above it, closed it on a 15 minute, and then we burst up here. That was pre-market though, so if we go back to the 5 minute also had you at hello here. Let's go see how the 15 minute is getting suppressed, or potentially or not. What's up? So the overbought on the 15 starting to come down, potentially. Williams in a ambiguous place at the top of the range, could come down a little bit further. Going to the 5 minute reset here, and we could be coming higher on the 5. Let's go ahead and look at the 5 minute. You did reach the cloud, and this is how it is in all time frames. You have that breakout above the cloud, come back and kiss the cloud, and potentially come higher. So you watch out for that cloud play. Don't trade against the cloud. If you're in from the baseline cross, you need to see it fade through the cloud for it to be valid, and then the cloud will start to turn purple and curve like this, and then you would break down and retest and come lower like that. Until that happens, we're still bullish, and this could still bounce off the 5 minute here. And so you could bounce off the 5 and come up higher. So this is where we can throw on some liquidation levels and see what's going on. So they previously wrecked all of these 100x shorts and the higher time frame shorts that got in and refused to close from down below. So these 100x longs that opened up, and some of these breakout longs, if they are satisfied with the 50x shorts they grabbed up here, they could come back into some of these 100x at 47.8. All right, so let's go take a look at the higher time frame. Bitcoin dominance and USDT dominance. So USDT dominance coming lower, constantly going lower and almost breaking the entire Fibonacci sequence that it is on the retrace. It almost came back to the 886 level of this impulse that it came out of. And you were previously putting in a rocket on Friday. We came even lower as more people inserted their USDT into trades. Once again, this is inverse to Bitcoin. So as USDT dominance goes down, people are putting their money into Bitcoin. This is why it looks the exact same as Bitcoin going up. as it goes down. So inverse relationship for USDT dominance, please check it out. So as we see this cross up event of the 6 hour at this 886, do we see a bounce up to this gap? And a bounce up would insinuate stopping people out. Does the retrace happen? That is the question. Coming to the Bitcoin dominance taking over the scene as Bitcoin is the star of the show, possibly gassing out if we start to get this cross on the 6 hour and we fall beneath the baselines. You could get a little bit of a reprieve and let the alts play ball. If the Bitcoin dominance drops and the USDT dominance rises, maybe people they cash out from Bitcoin into USDT to look for alts to trade. So this is where we turn our attention to the alt market, total 3. And yeah, total 3 holding this 706. We talked about it once again. The access granted to the upside occurred here on Wednesday, and we've seen this alt rally to the upside. If we go look at what are those alts, crypto bubbles, you can check it out on the daily. Flare, we've saw that before. Python network, Bitcoin Cash, Immutable, Chainlink, Algo, Near. A lot of things on the day. For the week, Dimension, Beam, Caspa. And this is how you can find out what's hot in the space in a minute. Hot minute. In the last hour, Immutable, Mana, Axie, Rune, and Multiverse EGLD for that. Coming to the total market cap. So we were talking about the 706 here and the bullish framework, the 236 held, and possibly coming up to that 1382 trillion level for the total crypto market space. Granted, you're putting in some nukes on these higher time frames like the 6 hour. The last time we saw that, granted here we had some upside, but this one played out. This one kind of played out. This one played out. Does the 6 hour here play out after a stop hunt? You're starting to get a little bit of a cross down here. So possibly pulling back to the 786 on the space. If this leaves, then once again we're going, that solidifies a retrace idea. All right, so if the Bitcoin retrace occurs and the alts also do something similar, we're going to go ahead and remove this one. I think this one is old, so we're going to refresh this impulse retrace idea from here. So we're going to go ahead and pull the trend base fib from here to here to here. And this 236 is fresh, so we have some other 706 levels to mind here. So if we start to get this pullback on here, it's possible. So once again, it's false moves Monday, so it's possible that the high has already been put in for the day. So before you look for higher prices, see how it reacts in London leading into New York. Playing the sessions off of one another is a key element to trading, using time on your and the sessions of the banks and how they roll on your side. Okay, so you have some pointed controls here from the weekend that we could reclaim to knock out the weekend traders. Coming back to here would not be strange to think. We stopped out a bunch of shorts. Can we come lower? We absolutely punish the shorts. Even coming back to the super trend would still have all these shorts that are down here trapped, and they could just get more liquidity to go higher. You can't go up forever. You have to retrace. Even to come back to go here, you'd have to get some liquidity from the late longers. It's time for any questions, and then we'll bid you adieu. My kids are off from school today, so I will go be with them. So what's up? I'm sharing your live streams with the Crypto Cash trading community on Discord. Feel free to come and visit sometimes, say hello. Sure. I don't know how to get there. Do you have a link? Could you put it in the comments or something? Whoa, what's up everyone? How's it going? Anyone have any questions or things they want to look at? We've looked at coins that have pumped, so if you're looking for some altcoins, please ask. Now is the time. All right, so let's go back to NASDAQ. Oh, while we're doing that, while we're waiting for comments, we're going to go look at the footprints chart for Bitcoin. Let's look inside the candles, because candles can be misleading. So we're going to go look in the footprints. This is a high level analysis looking at not time-based but trade-based movement. So all of the movement of the order flow is here, so we can see all of the order flow to that upside path from the open. So over here you had basically the sell volume started to wane, and then we started to get the buyers step in. We can go back here and look at that analysis. You can get a 14-day free trial for this, also link in the description. It is a quite nice platform if you ask me. So coming out here, here's where that happens. So we have the order flow imbalance that we can look at here. Just as we hit that bottom at 48K here, we started to see about 20, 40, 60, 80, 100, 120, 140, about 140. It tells you also in delta down below here, 254 negative delta. That means that sellers got hit, sell side liquidity was hit, which means the longs that were longing up here with their Mario flags got stopped and punished. Maybe they dollar cost averaged and then got punished here, and then they started to abate and then come up, and you have this volume reversal as we have a large influx of volume. You see the delta intensity increase here, and we can go up here and follow that path. You can see the sellers adding to their shorts or whatever, and then now the buyers take control. Buy, and these buyers are most likely stopped out shorts from down at the bottom if they were shorting. Then you have 42, and then here you have another 100. This is 100. Wait, what? Yeah, that's some cells entering, some 90 cells. And then right there you had an aggressive, I saw this on the open interest. This was a $2 million short that opened, and then they immediately went and punished that pool of shorts, and then boom, now hit the buy side, and then starting to get sold off, and then the daily candle changes, and now we are coming up into here, retracing down. Okay, so we're seeing some sell, buy, sell as we come back here for BTC. So this is a... What? What are you talking about? The pen? Can you say the pen? Can you say don't touch the pen? Okay, sure. All right, so let's go see if you have any questions. Looks like the sells, people are peeling off their longs up here at this 48.4 region. Some people selling and or shorting, you don't know which, but the idea of who's getting rewarded by their aggression here is showing seller aggression and rewarding happening here. As they come down here, you see some 100 Bitcoin coming in. This is the point of control for today. You can see it's starting to form the point of control as we put the value area high and we have the value area low. We could be testing the lows now. Let's go see what you have to ask. I had a question. What's up? Do you use your earnings whisper bot in the Discord for anything more than either way? Nice bot find. For the earnings report for like NASDAQ, when Tesla earnings and stuff were being shown, that was really nice to see. It was just like, it keeps you abreast of, things that could affect NQ and ES, you know. So I decided to make that thing a regular thing, because I don't actively look at Twitter because it's kind of negative. So I'd rather have the bots from those things just go direct to the Discord. But yeah, like when I was looking at that, the earnings and when they're coming, after or before the market, like knowing when Tesla is coming or not. So we had some nukes here on NQ. Are we going to see a little bit of a pullback? Yesterday we were talking about that in the pre-market analysis. We were saying there's some points of control to potentially come back to. You have one from Friday down here at 862. If you reject the point of control from basically Friday. So this is Thursday's point of control at 862. Friday's up here. So if we reject that, we could come down into these regions. We are at all-time highs. We have the 236 maintaining at 675. Do we come back and retrace down to the 706 for the access granted here at 916? Let's go see if you have any other things you'd like to look at. Anyone else? Well, that's my story, and I'm sticking to it, folks. So Bitcoin is, if you haven't yet considered subscribing, then please do. We will keep you short and sweet. We won't talk about other things, to just go straight into the analysis. So the point of control from Sunday down here at that 48,111. You have some other point of control, naked point of control as they call it, down at 47,317. This is why we have it down to that level. Do we come back and retrace the weekend volume nodes? Makes sense to me if we come down to that. Watch out for the 236. If the 236 fails, then you are possibly coming to here. If you hold it, then you could be coming and trapping more shorts for a squeeze to 49K today. There's no guarantees this happens today. We could just go sideways for 9 days, as we did down here. When we burst up, we held the range for 9 days, so there's no guarantee that it has to happen today. So that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the action, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.